Hi, Ginny with today's thought, and today we're talking about taxes because one of the first orders of business for the incoming Congress and the incoming Trump administration is going to be to make the Trump tax cuts of 2017 that are scheduled to expire in 2025, I believe in July, but it expires next year if nothing is done about it to keep them in place. That's going to be the first order of business, and we are now hearing these arguments that we always hear. Well, it's going to increase the deficit, it's going to cost this many, I think they're up to trillions of dollars or something over the next 10 years. And it's really, well, as somebody has said, however much you hate the mainstream media, you don't hate them enough. And one of the reasons is because they never simply report. That's what they're supposed to do. Their job is to report the results of tax cuts. Now, I'll get to the Trump tax cuts in a moment, but I believe the top tax rate was 90% when JFK was president, John F. Kennedy. He advocated tax cuts. I'm not going to show you the video where he argues for it. I could if you asked me for it, but you can find it on YouTube. But he argues the benefits of tax cuts, that they will increase economic growth and reduce the deficit, which he had at the time. Now, the obvious, I believe the top rate was lowered to 70%. We're much lower than that now, but the point is, does anybody think that we are getting less revenue now adjusted for inflation than we got during the Kennedy administration? Obviously, we've gotten more. Those tax cuts paid for themselves long ago. Ditto for the Reagan tax cuts, ditto for the Bush tax cuts, and now we're going to get to the Trump tax cuts. And this is the other thing that irritates me, because tariffs also, but also the tax cuts that people predict, or the critics, Trump's critics predict these horrible things that are supposed to happen if he institutes certain policies in the upcoming second administration. But these are things that he did in the first administration, and we can see the results, and they were either no effect or beneficial. There's been except I'll make one obvious exception. He should never have agreed to the Fauci lockdowns. That was a really dumb idea. I think he was pressured into it, to be fair, because I think that if he had not done it, he would have been blamed. He would have been held. The press, this beautiful press that we had, would blame him for every COVID death that would have happened from that, that would have happened, and blame it on him not instituting the lockdown. But obviously in Florida they didn't have one, in Sweden they didn't have one, and there was no difference. But so he made a mistake. I see why he felt pressured to do, because originally he wasn't doing that. He was doing what you're supposed to do, is quarantining the people who are sick. The people who have COVID, you quarantine the sick, separate them from the healthy people. You don't quarantine the healthy people. That makes no sense. But anyways, getting off the track again, let's get back to taxes. That was the one thing that they predict all these horrible things to happen, and they don't happen. Now, getting to the taxes from the 2017 tax cuts, we're talking about corporate tax cuts today. He cut the tax rate to, I believe, 23%, and now he's promising to cut it to, or he wants to cut it to 15% for corporations that keep their corporations in the United States, that do their manufacturing here and employ American workers here. So let's look at what happened after the 2017 tax cuts, and I'm putting the numbers up right now. Okay, now, if you look closely, obviously you can see the numbers, we'll go over them in a moment, but if you look closely below the percentage increase, you see Bureau of Economic Analysis. So that is where these figures come from. It should be U.S. Bureau of Economic Analysis, and I'm just putting that in there because some people may say, well, that's some conservative group came up with these figures, whatever, the Heritage Society, one of these conservative think tanks. No. This is the United States. These are the address is the URL or URL or whatever the heck you call it. It's BEA.gov. Okay, it's the United States government. So these are the government figures, and we see in 2017, this was the year that the tax cuts first went into effect. 297 billion in corporate tax revenue, and now we look in projected for 2024. So this is fiscal year 2024, and $569 billion. Okay, that is, as you can see there, that's a 91.58%, 91.5% increase in tax revenues from corporate tax revenues after the tax cuts. Now, to be fair, it's projected for the fiscal year, so it could conceivably be less, but it could be more. But on the other hand, the fiscal year is, we're about halfway through it, number one. Number two, because it begins, I believe, in September. It's not a calendar year. But anyways, the point is, whatever it is, it's going to be a lot more than 297 billion. You can be sure of that. So those tax cuts did not increase the deficit. They paid for themselves. So there's no reason to believe that we would not have similarly sanguine results from, keeping those very same tax cuts in place, number one, but further tax cuts. Because the problem is that the Congressional Budget Office, they calculate revenues or losses or whatever from tax cuts. They just use straight math. They just subtract the amount of the tax cuts. They should, and hopefully in this administration they will, switch to dynamic scoring, which includes or takes into account the increased economic growth that you get from tax cuts, which, as we just showed, you get, because you wouldn't get those increased revenues if you were not getting increased profits, which would mean increased jobs for the people who work for the corporations and salaries and yada, 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 right down the line. So they don't take that into account, so they should. But all of this, there is, because now somebody could say, well, if that's the case, then why not just reduce the income tax to zero? And I'm going to explain, for a second. If you reduce the income tax to zero, obviously you would get no income tax if it's zero. But let's keep in mind now, as I've pointed this out before, you have Florida, the state I'm in, Tennessee, the fastest growing state. So, of all the employment growth, the jobs created that Biden has been bragging about, half of those jobs were created in only two states, Texas and Florida. What do they have in common? The same thing they have in common with the state where I live, Tennessee. No income tax, zero income tax, and those states experience, very large, great economic growth. So if you got rid of the income, if that's true of states, imagine if the United States had a zero income tax. If we just got rid of the income tax and just had a national sales tax, which is what these states do. They have a sales tax. Obviously, they have to get taxes from somewhere. So if we had a national sales tax, that would be, that's a subject I should talk about, a national sales tax separately. The point for today is that, if you have an income tax of zero, then obviously you're not going to collect any taxes. But if you have an income tax rate of, if you get more revenue from raising taxes, why not have a rate of 100%? 100%, all your money goes to the government, and you would collect a heck of a lot more money, right? But obviously nobody's going to pay 100%. What you're going to have is maybe they won't collect zero, they'll collect something, but you're going to have massive tax cheating. You'll have people who will leave the country, and in our case, hopefully I would love to see us go to territorial taxation like every other developed country, that if you live in the country, you pay taxes. But if you live, let's say, I have a friend who's lived in Germany for 30 years, she still has to pay American taxes just for being an American citizen, even though she hasn't lived here for 30 years. So hopefully they would get rid of that. But a lot of Americans, they move overseas and they give up their American citizenship to not have to pay the taxes. And you would see more of that. So what we're getting to is something called the Laffer curve, which goes like he drew, Art Laffer, he's an economist, years and years ago, he drew it on a napkin, and it's just plain common sense. I don't know why Democrats cannot get this, but it's very simple. So you have a curve that goes, he drew it vertically. I'm going to go horizontally. It makes more sense. So you start from 0, and you go up the curve, then you go to 100%. So what happens, you have 0, you collect no income tax, and you start going up the curve, and you collect more and more income tax. But remember, if you go to 100, then you're not going to get 100% of everybody's taxes. So what that means is you go up the curve and you collect more and more taxes, but eventually you reach a point where just by simple math, by simple common sense, you have to start getting less and less tax. Less income tax. It has to go down, because when you get down to 0, you're hardly getting anything. So taxes go up, income tax, but then eventually, as you increase the rate, you're going to get less and less money. And the whole point should be, if we have to have an income tax, and it should be a flat tax, that's another story for another day, if we have to have an income tax. But the point I want to make is what the objective of tax policy should be is to find that inflection point where you start to collect less and less taxes. So for instance, I lived in New York for 40 years. I've mentioned this before. So when I first moved to New York, or early in my years, there was a Republican governor, George Pataki, and he cut taxes. I think the top state tax rate was 9% in New York and New York State. He lowered that to 7%, if I'm remembering correctly. I'm not going to look it up, but lowered to 7%, and the tax revenues went up. He collected more tax, and I believe it wiped out a deficit, if I'm remembering correctly. So the point is, we have to find this inflection point, and if New York State is any example, it might be as low as below 7%. We could probably lower, based on that example, and it's only one example, I'm being fair, but based on that example, at least, that you could theoretically lower the top income tax rate, have a flat tax of 7%, and you would still collect more money. So more tax revenues. That's my thought for today. Happy to hear yours in the comments section below this video. If you could subscribe, that would really be great. Share this video with anyone you think would benefit from it. But most of all, come back and see me again. I would love to see all of you again. And until I do see all of you again, bye.